Good evening, my name is Christelle from France de Klerk, Independent Technical Analyst. The first one on our list is Glencore, and we can see that this share gave a beautiful rally when it found support here in the week of the 26th of February, and it found resistance now for two consecutive times in the week of the 8th of April at 114 Rand 41, as well as in the week of the 13th of May at 114.62. Now the instrument is in overbought territory, which means the elastic band is stretched to a side, and should a negative divergence be confirmed when that blue line breaks downwards through the orange line, the probability for downside will be increased. Now at the moment we can see that there is a possible double top formation in the making. We can see that 105 Rand 94 is a very strong support. Now a double top formation, triple top, head and shoulder formations are all warning formations that the rally to the top might be coming to an end. And the confirmation of this double top will be when 105 Rand 94 changes into a resistance. Now we can say that the warning will be off the table, will become obsolete when either the left or the right resistance, depending on which one is the highest, 114.62, starts to change into a support again. The warning will be off the table, and we can assume then that the momentum to the top will continue. Take note that my 40-week moving average waiting at 104.69 is very close to that support at 105.94, which confirms that this is a strong level of support that needs to remain in place in order to sustain the momentum to the top. Should these support levels start to become resistance levels, it might imply that more profit taking can continue, and that in fact that it can actually escalate going forward. Strong support levels are at 99 Rand and 96, and obviously that closing price in the week of the 26th of February, which is waiting at 91 Rand 45. Anglo American, ticker on our exchange AGL, also one of the commodities that really rallied to the top. And now the big question is it losing steam? Is it running out of momentum? Now we can see since that week of the 29th of April, the share has stopped making new highs, and that tells us that there is not enough buying power to take this share to new recent record highs. Now we can see that the lower shadows of the candles are a little bit longer, which implies that there are still buyers that are buying the dips, right? But only when that high in the week of the 29th of April, waiting at 652 Rand 51, only when that level starts to change into a support again, can I assume that the momentum to the top will continue, and that we can maybe see the share price at levels we saw in January 23, which was waiting at 773.18. Now, a strong support that needs to remain is last week's low, and that is waiting at 595 Rand 52. Below that level, confirmation of weakness will be on the cards, and that might spark some fear in investors to start to take more profit, which means we can see a little bit of a further pullback. The share is above the 40-week moving average, which confirms that the long-term sentiment towards the share is positive. Very important, look at that stochastic. My negative divergence has already been confirmed when that shorter K line broke downwards through my longer orange line. Now, if I go back and we want to see, because I'm in that week of the 22nd of April with the announcement, obviously the share price was up 19.47%. So what we can do is we can use Fibonacci levels to identify closer support and resistance levels. And we can see at the 78.6% level, waiting at 599 Rand 47. That is the band that the share has been supporting in the last couple of weeks. Then the one below that at 61.8% is waiting at 556 Rand 63, 526 Rand 55, and it takes us all the way back to that week of the 4th of March, waiting at 400 Rand and 53 cents. Use those support and resistance levels to make decisions, to identify, listen, am I trading on territory where the sellers can become stronger, and that means more downside, or is there enough buying power to break through that resistance or roof and reach for higher levels? Richmond. One of the favorite shares on our market. It is trading above the 40-week moving average. That is very important, very positive. But now the big question is, can the share go back to that recent high in the week of the 11th of March, waiting at 3,188 Rand 90, right? Because what we are seeing at the moment is a possible inverse cup and handle formation. And should that support level waiting at the 40-week moving average at 2,624.75, if that level starts to change into a resistance, it tells us that this is a warning pattern that will be confirmed, which can take the share even lower. Only when Richemont starts to trade above the top of the handle, waiting at 2,936 Rand and 9 cents. Only above that level can I say, listen, the warning is off the table and the momentum to the top can continue. Now, that 2,624.75 is waiting at the 40-week moving average, as I said, as well as the support of the inverse cup and handle formation. And an inverse cup and handle formation is nothing other than confirmation of lower highs, because the share found support, bounced, but it did not go all the way back to the previous high. It found resistance there where it's at the moment at 2,894. And if this share starts to come back, it tells me, listen, there was not enough buying power to take us back to these levels, and that implies loss of momentum. The sellers are becoming stronger, and it's a warning formation. Remember, technical analysis is nothing other than measuring or showcasing the psychology of investors, whether they think the share price can go higher or they find value in the share price, buying it, meaning the share price starts to break through resistance levels, or are they saying, listen, I don't see value in here, I am taking profit or I'm getting out, and therefore the share starts to pull back, and that tells us that investors have lost confidence. So the stochastic indicator tells you basically how stretched the elastic band is, but also how hot or how cold the share is at the moment. So if it's in mid zone at a 50, it means it's not overbought or oversold, and this is the worst place to make a decision, because if you take your opponent on in a boxing ring, you don't do it in the middle of the ring, right? You want to do it on the sides where there's not a lot of room to move in. So we buy a share when it's oversold, and I'm using the stochastic here, but you can use any indicator that highlights overbought or oversold levels, right? So we want to do that when we want to buy a share when it's oversold, and we want to consider taking profit when it is overbought, when your opponent is tired and that elastic band is stretched. That's when you want to consider taking profit. And it is not an exact science, definitely not. If there was a guarantee on it, we would probably be doing other things. But it gives you an indication of the probability that, listen, this share is now getting too hot, so get out, take your profit, and look for something else that is oversold. Use those levels on Richmond to make decisions whether you want to take profit or whether you want to maybe consider a short, unless you want to chase the momentum above that handle. Kellanova. Kellanova is the new name for the old Kellogg's like we know it. Ticker on the New York Stock Exchange is a K. Very overbought at the moment, Kevin. Look at that stochastic sitting on an 83, but now for the last 4 weeks, Kellanova has stopped making new highs, right? That tells us, again, loss of momentum, and that there's not enough buyers to take the share price through that strong resistance, which is in the high of the 29th of April, waiting at $63.23. Only when the share price starts to change that level into a support again can we say, listen, the momentum is back, the buyers are seeing value again, and that they want to drive the share price higher. Very important. Look at last week's candle. This can be seen as a possible shooting star candle, right? It usually appears at the top of a rally, and the long upper shadow tells us that the sellers were strong enough to bring the share price all the way lower, which implies negativity or taking profit. And the confirmation of the negativity or the pessimism will only be confirmed when the following candle, the next candle, is a bearish type of candle. Now, it's still early days, and these are all weekly graphs, so we have to wait and see how this candle this week closes. But if they both are a bearish type of candle with long upper shadows, then the hint is, the implication there is that, listen, other investors are taking profit, and maybe you should consider doing the same. The share has had a beautiful rally, and listen, it doesn't mean that it's going to come back all the way. It might pull back to some support level, saturation level again, when the buyer sees, listen, it's a value, because we might start to see higher lows on Kellanova. Look, share pulled back, found support, bounced again, share pulled back, found support. Very important. This, what happens here, is critical in technical analysis, right? Two beautiful things happened here. One, there was a tweezer bottom. 2 consecutive candles found support at almost the same level and bounced from it. And that was done on a 40-week moving average, represented by that red line. And that is very positive, ladies and gentlemen. This can be seen, and this is seen, as a technical positive goodbye kiss. It tells us that there was enough buying power to lift the share price to higher levels, and it sure did, because then it was confirmation that the long-term sentiment, that 40-week moving average, the long-term sentiment has towards the Kellanova has now changed into a support as positive, and that is very, very important. Because we can see, and moving average are sometimes things that you have to play with to see which one fits the share price ideal. And listen, there are only a few, right? So it's either your 10, your 20, or your 40 moving average on weekly graphs, and then on daily and intraday graphs, there are a certain amount of moving averages that you can use to identify short-term, medium-term, or it's maybe play with this a little bit and see which moving average on this particular share highlights strong support and resistance. Look at this. In that week of the 2nd of January, Kellanova, the share hit the 40-week moving average, almost found resistance from it. For 2 weeks here in February, it tried to change it into the support. It could not. And then in the week of the 25th of March, it did, pulled up a little, bounced a little bit, came back, and then that was that tweezer bottom that I spoke about, and that is very positive. And if I go back again, look at that, how beautifully this 40-week moving average was a strong resistance on Kellanova, showing that this is a level of resistance that one should be using to make decisions. And it was it also highlighted where the long-term investors say, listen, there's no value for me at these levels, I am taking profit, and obviously that sparked more downside. And if we go back, we can see the 40-week moving average was a clear support or resistance on Kellanova. So I'm happy to use that. And in most cases, the 40-week moving average is the ideal moving. And you've seen across the videos we use this moving average because it's such a reliable support or resistance levels, and it sometimes just takes the noise out so you can make a decision and maybe hold on for a little bit longer, as long as that level is a support, or start to take profit when the share price starts to change these moving averages into a resistance. Amcor, also listed in the US on the New York Stock Exchange, ticker AMCR. Look at that, stochastic overbought, negative divergence, very important. This can be seen as a, what is that? Evening star formation, a 3-candle pattern, right? Where it's a bullish type of candle, doji type of candle, followed by a bearish candle. That tells us, listen, the evening star is up and the night is in front of us, which tells us we can possibly see more downside should the share price continue to consolidate below the low in the week of the 6th of May, and that is waiting at $9.97. Below that level, I can say, listen, the resistance is there and we can possibly see more downside. That is a warning formation to say, listen, other investors have for 3 weeks now acted in a way that is suggesting that there might be more downside. So below that, more profit taking, but as soon as that high of $10.51 starts to change into a support again, we can assume that the momentum to the top can continue. But with this overbought situation, the consideration will be rather to take profit and not consider a buy at the moment. However, if you want to make use of this possible cup and handle formation, wait for the share to pull back first, wait for it to become oversold on any indicator, confirmation in a candle, and then you can consider accumulating again. Don't forget to send through your requests for next week's show either via email or Twitter. Have a fantastic week. Take care.